Today in the show we have Transak and Visa partnering to enable global crypto withdrawals, Hamsa+Matera partnering in Brazil to facilitate DREX implementations, MUFG and Progmat exploring stablecoins to settle trade between Japan and emerging markets, and so much more. I'm your host Mauricio Magaldi, and this is Block Drops, your weekly digest on blockchain for business. These news are not a form of endorsement, sponsorship, or encouragement for consumption and are meant for educational purposes only. So in the first drop today, we're back to UX, to user experience. We keep saying this because we keep seeing more and more examples of companies, both crypto natives and non-crypto natives, working together to achieve a better user experience. So this week, Transak, which is one of the prime infrastructure providers for payments for crypto and NFTs, announced that they're partnering with Visa for their Visa Direct service to extend the ability to transact in crypto versus fiat for over 145 countries. So this is significant, right? There's a big footprint for Visa. Transak specializes in a particular type of payment. So this seems to be something that we're waiting to see. So according to the announcement, and here I'll quote Nilsa Gonzalez-Ore, who's the North America head of Visa Direct and Global Ecosystem Readiness, she says, and I quote, "By enabling real-time card withdrawals through Visa Direct, Transak is delivering a faster, simpler, and more connected experience for its users, making it easier to convert crypto balances into fiat, which can be spent at more than 130 million merchant locations where Visa is accepted," end quote. So here's the gist of it. If you are a crypto holder of any kind, by connecting your wallet to Transak, you can now unload that balance through the Visa Direct service, meaning you're going to have probably a Transak card that is connected to your Transak account, meaning you're going to have to identify yourself, and you're going to connect your wallet to Transak, and then whenever you want to use that card to pay for any services using the card, you can do that sourcing the balances from your connected crypto wallet. Now, this is not exactly, say, self-sovereign or self-custodial, because yes, you're using Transak as a service, which is an intermediary, and Transak is actually reaching into the fiat world through Visa Direct, which is yet another intermediary, which means that we'll see potentially a take rate from these services. But if you think, what is the alternative? Well, for now, most people would have to get the crypto holdings, would have to move from their self-custodial wallet to a wallet on an exchange, on a crypto exchange. They're going to have to get liquidity from that exchange and exchange the cryptocurrencies they have to fiat in the exchange, and then move the fiat balance from that exchange to their bank account. And there's also a lot of take rate involved and a lot of delay and a lot of time. And now with Transak, apparently in Visa Direct, you can just swipe the card and they'll handle the use of the balance, right? You're probably going to have to authorize the wallet on the Transak and all the types, and there's probably some controls in terms of amounts and types of establishments you can actually use that on, but still is a better UX than having to go through manually through the process of actually selling the crypto to get the fiat, to then move to the bank, to then be able to use your Visa card probably. So pretty cool setting. I'm excited to see more. This is probably the best way to start creating less friction in the use of UX. And if this attracts more people into Web3, because it's easier for them to actually use whatever they make out of NFT flipping or DeFi yield farming or the crazy airdrops we've seen in the last couple of weeks, well, then there is more incentives for people to actually come into crypto and stay in crypto, because then they can use their savings in the practical day-to-day world, which is what payments are for. So let's keep eyes on this and maybe try to find someone that can speak to this from Transak or from Visa and see how much more we can uncover from this story. Drop number 2 is from my home country, Brazil. It's the announcement of a partnership between Matera and Hamsa. So if you don't know who these folks are, so Hamsa is a global leader in real-world asset tokenization. Right now, they have over $3 billion in tokenized assets that they have managed to tokenize. And Matera is probably one of the most important technology providers in the financial services market, in banking in Brazil. They are a big player in Pix. Pix is the instant payment system in Brazil. It's not blockchain based, it's centralized, but Matera has a big hand on taking the system live and integrating banks of all sizes to Pix. So the announcement they made is around DREX. DREX is the third name I'm bringing to you, new name maybe bringing to you today. DREX is the Brazilian Central Bank pilot for the digital currency. So they're CBDC, Central Bank Digital Currency. DREX involves a pilot using Hyperledger Besu, which is a permissioned version of Ethereum. It uses the EVM. It is an EVM compatible chain, but it's permissioned, meaning only the banks and the central bank get to produce blocks for that particular implementation. So they announced this partnership that will integrate Hamsa's platform called DREX Connect, which they are using in the CBDC pilot for DREX in Brazil, with Matera's Pix integration, which is, again, one of the most popular and the widespread platform for Pix across banking in Brazil. So the partnership will offer the Brazilian financial institutions an easy way to test, integrate, and get prepared for DREX. Again, DREX is a pilot. So according to Henrique Teixeira, who's the general manager for Latam at Hamsa, he says, and I quote, "Combining our expertise with Matera's expertise, we establish a new standard of excellence for the banking sector, and this partnership will undoubtedly generate results that are meaningful for the financial sector in Brazil," end quote. And from Carlos Neto, who's the CEO and co-founder from Matera, he says, and I quote, "Brazil is establishing the global standard for the digital financial revolution, first with Pix and now with DREX. As the use of physical money is dropping in the whole world, the demand for cryptocurrencies will continue to increase. We're excited about developing a breakthrough solution for the market to transact with DREX and integrate this resource directly into the banking platform for the major banks," end quote. So there's two ways of seeing this, right? DREX is still a pilot. So some might say, and I've heard people say, that this is a little bit too early to commit to such a partnership and take this to market while, the pilot is still a pilot. It might be the case. But fact of the matter is, Matera is used to collaborating with both the central bank and the regulated entities that the central bank regulates. Hamsa has been in the DREX pilot working with a consortium of other companies. They understand what's going on with DREX. They understand the limitations. They understand what the central bank is trying to do. So another way of seeing this is that, well, these folks have expertise and they have enough information at this stage to consider that this is worth bringing to the public. So I'm not going to be the judge of that. I think history has its own way of dealing with the risks taken, but I feel this is probably a good bet on their end. We're going to try to bring either Carlos or Enrique to talk about, Hamsa and Matera in the context of DREX. Maybe take a little bit, try to pick their brains into, how this partnership came about, and maybe even a little bit about what the solution looks like. So I'll keep you guys posted. It's been a while since we last spoke about trade finance, so drop number 3 today is a note about the new pilot or the new exploration project by Japan's number one bank, MUFG. MUFG is partnering with Progmat, which is a spin-off that they own that is focused on blockchain-based solutions for tokenization and stablecoins. It's partnering with StandAge, that is an expert company in export settlement, and with Ginkgo, which is a Web3 wallet that already collaborates with them in other projects. And this kind of consortium of companies funded by MUFG is going to start to explore the use of stablecoins on trade settlement with emerging markets for Japanese exports using public blockchains. The goal is to get the same level of certainty of payment as you get from a letter of credit, but without the need for, say, a bank guarantee or credit itself. This exercise is going to try and leverage the abilities that are available in public blockchains, such as the data transparency, programmability with smart contracts, to facilitate or overcome the challenges of importers when dealing with Japanese imports by leveraging US dollars. Some of these countries have foreign currency restrictions. They are sanctioned, or they have restrictions on using letter of credit. And by using a transparent public database, such as a public blockchain, they are trying to solve the transparency and automation, so you can actually do things like an escrow contract. So the smart contract actually holds the stable coins until everything is clear, so the importer can actually hand over the amount or the corresponding amounts to the deal, and as soon as the conditions are met, meaning there is enough risk data appraised, there is enough data on the goods that have been imported, then the payout is then released. So there is quite a few steps in the process of a letter of credit that can be automated by the use of transparent risk data and transparent funding data that could definitely be automated with the use of smart contract, and obviously using stable coins that are native to the blockchain would be even more interesting in terms of how to manage the liquidity, how to manage the risk and the counterparty risk for the exporters, right? By having a smart contract that is a autonomous piece of software running, both parties involved can see every data that's available for the smart contract to act on, and you don't get the goods, I don't get the payment, and if you get the goods, for sure I'll get the payment, because that's exactly what the data is going to reflect in the smart contract being used and the stable coin that is being held by the smart contract. In a nutshell, trade finance is probably the one industry that can gain the most by having widespread adoption of blockchain. Right now, there's still a lot of paper involved in trade finance. There isn't a lot of standards that are digital standards. There are a few standards, but there is no winning standard across the world in terms of making trade finance digital yet. But there are legislations coming out that are going to facilitate. One of them, we spoke about this already, mostly last year, is the Electronic Trade Documents Bill, now Act, in the UK, which allows the bearing documents, the documents that are in possession with the people involved in releasing the cargo, say on the terminal, can now be held digitally in a cryptographic manner, meaning blockchains. So the combination of this particular setup with stablecoins and smart contracts and the equivalent of the bill of lading registered digitally on the blockchain might be the chance that trade finance has to really unlock that access to a variety of markets in a level of efficiency yet unseen in the industry. In a week packed full of news, here is more. PayPal invested $5 million of its own PYUSD stablecoin into the platform crypto startup Mesh. A first cross-border payment was made using UAE's digital Dirham to China using China's mBridge platform. TechUK and a variety of other UK entities released their Digital Currency Glossary in preparation for the Digital Pound program. Hirechain launched an integration for job applications on Farcaster called Hirecaster. A number of US legislators are aiming to unblock crypto custody by banks by canceling the SEC rule SAB 121. Acctual launched a crypto invoice service for on-chain invoicing and payment. The Brazilian startup for stablecoins BRLA achieved 4 million Brazilian reais in their pre-seed round. Moss, the carbon offset startup from Brazil, will offset the emissions by Club Atletico Osasuna in Spain. And Mercado Bitcoin, one of the largest, if not the largest, crypto exchange in Latin America, announced a co-branded card with Mastercard. Catch us online. We're on Instagram at BlockDropsPodcast, on Twitter at BlockDropsPod or 0x Mauricio. We're on Lens at blockdrops.lens. We have a newsletter on LinkedIn. Write to us at blockdropspodcast@gmail.com, and you can listen to the Block Drops podcast at Spotify, iColab, Faberbun Tech, and all of the other major streaming platforms. Yay! Shoutouts today to the people who shared the links you will find in the episode notes. José Fernandes da Ponte, Kai Sheffield, Alan Desira, Victoria Thompson, Tom Phelps, Jack Evans, Cássio Gusson, and Claudia Mancini. Don't forget to leave your ratings on your favorite player. This is all for today. Stay rare, stay weird. LFG.